Geopolitical risks are high after the U.S. military took out one of Iran's military leaders. So now, the risk of retaliation is the biggest question surrounding the markets. A retaliation could cause oil prices to spike higher and may cause a drop in the stock market. On the other hand, the markets may shrug off the situation the way they did when oil tankers in the Straits of Hormuz were attacked last summer, or when the Saudi Aramco oil fields were attacked last September. And then, late Friday evening, and less than 24 hours after the first drone strike, reports are coming in on another strike of Iran backed Shiite militias near Baghdad. Perhaps the markets have been discounting this potential for a long time. Of course, we can only wait and see, but it sure looks like somebody wants to take away the stock market punch bowl. But consider this: when the markets run up this much, almost anything is worthy of a correction, and the airstrike is a good excuse to get a small correction. In other news, next week the Fed will drain nearly $72 billion in liquidity if term repos aren't rolled over. Now, don't worry too much about what term repos are. The important part is that the Fed will essentially drain money from the market if the repos are not rolled over and instead are allowed to mature or expire. Just watch next week as the term repos mature. And the schedule is that for Monday, $25 billion worth of repos mature. On Tuesday, $28.8 billion mature. And on Friday, $18 billion of repos mature. I think 2020 is going to turn out to be an interesting year. So now let's go take a look at the charts. And today we're going to be relatively quick looking at one chart, the 2-year weekly chart. We're going to look at the SPDR's Dow Jones Industrial Average ETF, or the DIA. We don't look at this very often, but we'll do that today. The close on Friday, 286.32. And you can see that we were near a record high, but we had that day today, Friday, with the consolidation in the market based on the news. Regardless, we're elevated well above the 20 EMA here and the 50 EMA here. You go back in time and see other elevated levels such as here, here, and here, and each of those was followed by a quick correction down to about the 50 EMA and maybe just a little bit below. And I think that's going to be about the worst that I would expect, at least at this time, depending upon what circumstances may play out this weekend and into next week. But for now, I think we're going to roll over given the news that we had that's happening there in the Middle East, along with the repos that are going to mature next week as well. Here, the MAC looks good, heading on up to that 5 level. So there's good strength in both the fast line and the slow line. Doesn't look too bad at this point in time. But you can see here in the histogram, we just had a very slight consolidation. Now, I think that the greatest probability is that continues to roll over into next week and maybe the weeks after, but we'll have to wait and see. But I think that's where the greatest probability lies. Here, the price rate of change looks fine with this bounce or reflection off of the slow line heading on up, but I think that's going to weaken and head back down again towards that 0 line. Into the relative strength index, we're at a moderately strong 79.51 level, but it's leveling off here, and I think that is probably going to turn down. That would be my expectation. And you can see that downward turn here in the stochastics with the fast line just meeting the slow line there. I think if things play out, the fast line should move through that slow line. Now we're above that 80 level, between that 80 and 100, so this is the overbought territory. I don't know how far down we're going to go. We're just got to wait and see how steep this turns into, this downtrend turns into next week and the week after. Moving here into volume, volume looks fine. And then the Williams, you can see the downturn in the Williams. And I think the Williams is going to lead the other oscillators. So we'll watch that, see how fast this line moves down. And if it moves down and out of that overbought territory, that will then lead the other oscillators and the market as well. So back up here, one last look at the market. And things haven't been too bad, but I think circumstances are such that not only is it time for a correction, I've been waiting for one, and I've been early, but that's okay. I didn't lose any money, but I think circumstances in the news will help turn this market and head lower, at least for the near term. And that, I think, is the greatest probability. And so for today, that's ChewDog Charts. Thank you.